Hi guys, it's Ben RC with the Boca Voice, and today on Keys to Boca, we talk about alternative financing. So I have my good friend here, Charlie Weiss. He's taken some time out of his day to talk to us about the different products available for the people that don't really fit inside that conventional box. So Charlie, thanks for being here.
Thanks for having me.
Appreciate it. So Charlie, why don't you tell our audience a little bit about who you are and your experience as a mortgage expert?
Yeah, I've been in the mortgage business here for almost 15 years now, and I run a branch of Resmac Mortgage up in West Palm Beach.
Okay.
We're down here also.
Your corporate office is
The
there,
corporate
right?
office is
Okay.
right down the street.
Good.
And we have all sorts of products. The last few years, we've had less and less products
Right.
that used to be available. And now I guess we're going to be talking about some that have come back.
Right. So, right, like as Charlie said, and as many of you guys know, as the economy changed these past couple of years, some of the mortgage guidelines have really tightened up. But as the economy got better, they started to loosen up as they did.
So some of the guidelines have loosened up a little bit more, but it's still all Fannie or Freddie or FHA. Those are the conventional or government loans.
Right.
And now that things seem to be getting a little bit better, there's more products that are out there to get financing to those people who really have the money but just don't fit the right conventional guidelines. So
So why don't we talk about those? I think we identified 4 products. That I think are going to be useful for our viewing audience. So full documentation.
So full documentation loans are basically what all loans are. All loans right now for Fannie or Freddie or FHA require full documentation for your income and assets. There's reasons why some people won't qualify for those products.
What would be just like an example? Yeah.
They had a foreclosure or a bankruptcy in the past. They haven't met the right time period. A lot of times with foreclosures, the property was really foreclosed upon a long time before it got taken out of their name. So they have to wait 7 years.
Right.
This product allows you, if you're able to document all of your income, but you don't qualify for one reason, it allows us to use that. It's a one-off loan.
Okay. All right. So that's full documentation. So it's pretty much like what's available now, but there might be something that's kind of puts you outside that box.
Correct.
Got it. So what about asset depletion?
Asset depletion programs are for people who have a lot of money and don't want to just tap into it to pay cash for a house.
Okay.
So we're allowing you to, we have a calculation that however much money you have in the bank that you're documenting, we're able to take that over years and come up with a number that you're able to use as a monthly income.
So like in a savings account, an investment account, like yes. To both. Okay. All right.
All over. So we can take your total assets, come up with a number that's going to work. Doesn't necessarily mean you have to take that money out every month.
Right.
You might have it coming from other sources, but that's what we're going to use to calculate your usable income.
And are you borrowing it against your own assets?
You're borrowing it against, the loans are all made against your residence.
To the property,
Yep.
correct. So that's the collateral.
Yep.
Got it. Okay. And now what's interesting to me, and I think a lot of people like me or a lot of entrepreneurs, but a lot of entrepreneurs these days are, there's 2 different types of like self-employment loans.
So it's really, if you have income coming in
Right.
and it's just not steady, you're not getting a W-2 if you're self-employed.
Right.
You have 1099. You might have income coming in from different streams. The way the government loans are set up is they look at 2 years of that job in particular. You might have switched LLCs. You might have had a partner leave. You might. It just doesn't necessarily add up to as much money as you're actually making.
Okay.
And you might be borderline of being able to be qualified for a Fannie or Freddie loan.
Okay.
This allows us to take a look at either 12 or 24 months worth of your bank statements and give you that income divided over 12 or 24 months.
Right. So just looking at the income coming in.
Correct.
Because again, like somebody like myself, I'm not getting a W-2 or another entrepreneur or business owner.
Yeah, they might not have. They have steady income over 24 months.
Right.
But not necessarily the same last year as this year. They might have more income coming in now.
Okay.
It gives us people that should be able to buy a house, it's
Right.
giving them the ability to do that now by averaging it over 24 months.
Right.
And not necessarily just the tax returns or W-2s that we see for those programs.
Right. And that's truthfully why I wanted you to come on here, and speak to our audience, because, unfortunately, home ownership's at an all-time low, right? And I think we're seeing that in the news and stuff. And I think it's our job as industry experts to promote, that there are ways to get financing if you don't have the cash to buy a house. And you don't always have to fit inside that box, right?
Yeah, there's been a real void between. There's always been the option of private money and
which is expensive.
Which
That's
is
the problem.
expensive. People call it hard money. There's all different types of loans out there, but you should be able to tap into something that's not 10, 11, 12% interest.
Right.
The current rates, you're looking at around 4%. These products are a little bit more expensive, but still get you in there. And then there's interest-only options on them. There's all kinds of stuff that's there.
Okay.
And it's a good way to be able to get into a house.
Right. All right, good. All right, so listen, I thought the information was useful. Hopefully they did too. Really we just wanted to spark a conversation, and people who are thinking they potentially could, but maybe have been told a year ago that they couldn't for whatever reasons. I mean, obviously, full disclosure, guys, there are restrictions and things, and if you have any questions, reach out to Charlie. We're going to tag him on this post, or leave questions in the comments below. We'll make sure we'll answer them. So
yeah, this is just information. I mean, there's lots of things that go on in the program. The guidelines for these programs are 60, 70 pages, but we can help move you in the right direction.
Okay. And one last question. So where are rates today, and what do you think we can expect going throughout the year?
Depending on the more documentation you have, the better the rate is, the closer it is to conventional rates. And if you don't want a 30-year fix, if you're willing to take something 5 to 10 years, then the rates are very close to current conforming rates,
which are
in the fours.
In the fours. Okay, so it's still holding very strong.
Yep. So then the further along you go, the less documentation that you have, the higher the rate goes. So we're talking 6 to 7% also.
Right. Okay.
All right.
Thank you. Listen, I appreciate it. So guys, I hope this information was valuable. Again, if you have any questions about any specific products, reach out to Charlie, or like I said, leave comments below. If you did find this information, good, share it with your friends, like the video. And as I always say, if you're not yet, please follow us at the Boca Voice. We discuss all things real estate, politics, restaurants, everything else in between here in Boca. I'm Ben Arce, and I'll see you next week on Keys to Boca.